Mackenzie Johnston with Tri-State Livestock News, bringing you discussions concerning fair cattle markets. Today we have the opportunity to talk with John Nalivka. He is the owner of Sterling Marketing Incorporated. Can you just tell me a little bit about your background and your involvement within the cattle industry?
I've owned Sterling Marketing for 30 years. I do market advisory and economic consulting for companies across the entire supply chain, producers, packers, processors, restaurants. A large share of our client base is restaurants, but I also have a lot of packers and processors, not just packers, but also packers and further processors as clients. My partner, he and I took Sterling in 1991, and then I bought his share of the company in 1994. So prior to that, I was director of research at the Helming Group in Kansas City, and I also do some work with banks and private equity firms. I've got clients both in the United States and Canada.
So what do you think are the major issues standing in the way of fair cattle markets today?
I think the problem, Mackenzie, and if you really define, what is a fair market, because the word fair, that's somewhat and always in the eyes of the beholder, but by the strictest definition, fair, it's impartial, and you shouldn't have any bias in it or self-interest in the finding fair. So you put free. So then you put the word free with market, and I'm not sure if there is such a thing. It's somewhat in the eyes of the beholder because, like I've said, when they wanted mandatory price reporting in the beef industry 20 years ago, whenever it was, and I remember sitting at meetings, because I'm pretty active in the Idaho Cattlemen's Association, and sitting in meetings and just the conversation in a group of people about this whole idea of, I just want to be offered fair prices. Well, fair prices to you may not be fair prices to the guy sitting next to you. And one thing, Mackenzie, it's just like I said this several times to several people over the last year, but the industry has moved ahead towards premiums. If you produce the right cattle for the right market, is the way I always put it, and you have the opportunity for a premium, and your neighbor doesn't think that's fair because he doesn't want to go to the same effort that you've gone at from every perspective of producing those cattle and marketing them and taking the time to understand where you need to be with them and everything about it, plus spending the money. There's an investment in sometimes, when you make some of these changes in your operation to make a commitment to a branded beef program. Your neighbor may not want to do all that, but what are you going to say when he says, well, that's not fair that you're getting $300 a head premium? I've got good cattle. So it's a little bit of a slippery slope, I guess is what I've said, or probably a lot of a slippery slope. If you're only operating at 50 to 55% of capacity in your plant, and there's plenty of cattle out there, are you obligated to go pay absolute sky-high prices just because of benevolence? And I'm not saying that in a nasty way. I'm just saying that was the situation we had in April, May. And the packers did, come up and pay more money. They upped the ante. They were up to $1.17, $1.20. There was $1.20 paid for some cattle. But I had strongly advocated, and I still do very, very strongly, I advocate. The situation today is, instead of thinking this is just fair prices, or fair markets, think, how can I, increase my revenue, and by getting more value out of these calves these cattle I'm selling today, not only creating value, but also, capturing that value. You can create value all day long. If you're not paid for it, it doesn't really matter.
What's your thoughts on Senator Grassley's proposal with the 5014 bill?
I don't agree with that because anytime you put the two words government mandate around me, I'm going to disagree. And I think, again, it's always be careful what you wish for. I'll tell you, Mackenzie, for over nearly 40 years, I have done work, been an expert witness, and done for ranchers, on behalf of ranchers, and lawsuits against the BLM and the Forest Service. And when you do that enough, and I've been around and I've run ranches where we had BLM permits, and I'll tell you, it'll just absolutely turn you against anything where somebody says the government's here to help you. It almost makes my head explode when I think about the government mandating that a certain number of cattle, a certain percentage of the overall cattle on a weekly basis will be generated through negotiated price. If I was that guy sitting out there and had a formula price on a forward sale and was very happy with it, I don't know if I'd be very happy about that.
Earlier this spring, President Trump made the statement that he would like to terminate trade deals where we import cattle. What are your thoughts on imports of beef and cattle?
I'm also a free trade person, but I think free trade, I don't agree with that statement. I think what he's done with regard to trade is what should have been done a long time ago. And I think if you negotiate tough trade agreements and take into consideration both really are working on behalf of American businesses and producers, whatever it might be, I think you end up with agreements that are good. And I think we've seen that with the new Japanese agreement we did. The thing about trade, there's two sides to trade. And if you don't have both sides, you're not going to get the side that you like, which is exports. Trade is a two-way street. And the key to that trade is that you negotiate an agreement that's understandable and well thought out, and you're not just giving the farm away in order to get a little tiny piece that you think's. And part of the problem with trade on these trade agreements is you fill a room full of lobbyists, and obviously it's driven by lobbyists, and unfortunately, trade agreements are written by staffers, and I probably have, obviously, I can tell you, I'll be upfront, I have some bias in it, simply because I've got clients who are using imported product, but at the same time, I've got clients who export. Those trading partners, you have to hold their feet to the fire.
What are your thoughts on the DOJ investigation into our 4 big beef processors?
That's an ongoing saga that's been ongoing for 100 years. You can probably pick out other industries. It surprises me that the cattle industry doesn't go after some other industries that probably you could accuse of having antitrust activity. Here's the bottom line with the packing industry. It's a tough business, and economies of scale are extremely important in that industry. And that's why economies of scale drive that industry, because it's high cost from every perspective. And you're dealing with livestock and people, and the people aspect of it about hit the max in April with regard to what can happen to be disruptive with COVID. And the industry, they had to put a lot of money into all these protocols, the packers did, and they're having their feet held to the fire by the union. And they're doing it. And so in everything that they're putting in place with regard to these protocols for coronavirus aren't going to go away. These are things that are going to stay in place in these packing plants, and it adds cost. A successful plant is successful because it's captured economies of scale, which means getting bigger, so you can spread those costs over all those fixed costs over more units of production, and that's just the reality of the packing industry. I personally don't think we're in another investigation. It's not the first one, and I've always said this: you could take the entire industry and break it up into smaller pieces, and within 5 years, you'd be right back to where you started from.
We have seen quite a few independent cattle producers drop out of the industry within the past 10 to 15 years. Do you think, with that occurring, do you think our industry is in danger of becoming vertically integrated?
No. When you look at the structure of the cattle industry and the beef industry, the U.S. cattle industry is driven by the structure of it is a function of forage availability. We've got a lot of forage in this country, and it goes from the East Coast to the West Coast and from Canada to Mexico. And the largest share of that forage is in the center of the country, from north to south, and down to southeast in the southeastern states. When you have an industry that is widely dispersed because of that forage and driven by forage, the desire or the incentive and motivation to try and incorporate that into a vertical model like pork or poultry industry, it's not there. Again, you're adding cost. The reason why this industry works so well is because cattle are forage consume forage. It's cost effective. But part of that too, here's the other part of that story is that, we have lost a lot of cattle ranching production operation, cattle ranches. Well, out here where we live, I'll tell you, there's been a lot of these places that have been sold to very, very wealthy people, and they don't run cows. They start out running cows, and then they don't run cows. And it's like I always say, these places are bought for the value of pretty. And when you've got a nice range of mountains behind you and quality, high quality fly fishing and elk hunting, that's what they're bought for. And people pay a lot of money, and they pay an amount of money that you'll never make them work running cows for those prices.
A lot of people are talking about this backlog of cattle that we are going to have to work through over the next few months. In your opinion, how big of a backlog are we facing, and how tough is it going to be to work through?
Well, my number was somewhere around 500,000, probably 550,000. It's somewhere around that area of 500,000. And I did that on an analysis of the flow of cattle through starting in March and working through the on-feed numbers. And the trouble is, the weight, I've never looked at the weight breakdowns hardly on these cattle on feed reports because I don't have a lot of confidence in those numbers. But if you look through the flow, and we were continuing to work through the cattle, and so I kind of felt like, based on my analysis, if you look at our marketings and our on-feed inventories and the flow of cattle during the month of the cattle going out and the cattle coming in, cattle coming in was down 22%. And our marketings they slowed significantly, but we came into that period with everything in pretty good order, I thought, with regard to being current. I think it'll take us probably, even where we're at, though, we'll be into August working through these numbers. And the bigger issue, aside from the numbers, is the weights. We didn't just pick up the weights during April when these plants were shut down. We came into the year well above a year ago, record levels. Our weights were record heavy on a weekly basis coming into the year. And so when we came into this situation, these plant shutdowns and these cattle standing there and getting bigger, they were getting bigger on a weight that was already too big. And they've continued to get bigger. Part of that is, we've got, relatively low feed costs, cost to gain on these cattle that should have been gone 2-3 weeks ago. Obviously, if they're still standing there, then their cost to gain is higher because we're at that inefficient part of the feeding cycle, and again, the cost of gain's higher. But if you only look at the cattle that are currently being placed and they go through a normal situation, cost of gain is really in pretty good shape. Those feed prices in a declining market encourages people to hold cattle longer because they don't want to, sell them a lot. But the break-evens on a lot of these cattle are, $1 to $1.10 on current placements. So that comes back to the other thing on this too, on these fair prices. When there's pressure on the fed cattle or grain prices go up, the feedlots always reduce their bids on the feeders. The feeder cattle is really the only opportunity you have to lower your break-even because the feeder cattle represent 70-75% of your cost in the feedlot. And it's like they say that your margin was made the day you placed the cattle, and that's because of the cost of the feeder cattle.
Do you have an outlook for the markets going through the summer and then specifically in the fall when we hit our big runs of calves?
One thing, and I'll preface it with this comment because this goes in line with getting through this backlog of cattle. The cattle that didn't get placed in April and May into the feed yard and went out on grass, those cattle are going to come off grass and go in the feedlot. We've distorted terribly our market pattern and our normal marketing pattern and flow of cattle this year because of these plant shutdowns. So you not only have the backlog, but when those cattle get placed and are going to the feedlot, it's not that we don't, obviously there's always cattle coming off grass in late July, August, and early September. We've always got that. Now we've got more of them. And so I think some of those cattle, if the gains, based on my calculations, we'll start to see some of those cattle at the end of the year come down the feedlot, and then they'll trickle into the beginning of next year in terms of supply. I originally thought, had we not had coronavirus and everything would have been flowing along a nice even keel and where I expected. I thought, our weights would stay relatively high, but they would get our marketing pattern, we get marketing's current, and the weights would not get to the level they are now, but we still have continued some level of liquidation, and we go into next year with a lot less numbers of cattle, and things would even, pick up. But I think as we go into this summer, proceed through the summer now, I think these prices, generally we're going to be in probably $1.05 to $1.10 trading range. I think the demand is really, really good. And so as we go into the fall, prices kind of trade in that area. And then I think there's a potential of bringing these prices up into that $1.10, $1.15 range on these fed cattle as we go into, the fourth quarter, and then come up into the low 120 range as we go into the first part of next year. Again, it's going to be demand. The other part of the equation is, this is one of my assumptions, I think on the pork industry, I think we'll get into where we're going to reduce our total meat supplies because the pork and the poultry in this pork situation has been bad enough that, I think we're going to see that. We'll see about a 4% drop in hog supplies going into the fourth quarter. And, that pulls down your total overall available. It's still large, but not what we would expect. It had nothing. We didn't have COVID because the hog industry obviously was on a expansion tear, to fill those plant capacity and exports. I think, we're about on these 7.5 to 8 weight cattle. We're trading in that, around that $1.30 range. Mm-hmm. I think as we go into July and August, even though the numbers are going to pick up, I think there'll be enough demand to keep those cattle in that mid to upper 130 range. My estimate of the cow-calf margin is not great this year.
Earlier, you made the comment that you're worried about these carcass weights with these big cattle coming out of the backlog that we're dealing with. Are packers going to have problems with those heavier weights?
They can. And, one thing that's not, and it's just, the physical size of the carcass is one thing, and we're probably not to that point. The other problem is, and I've thought this for, quite a few years, and that's the physical size of the cuts. I always use the example, I don't know why I use this example, but of a strip steak. And if I go down and I buy a strip steak, 12 ounces, but I didn't really want that big of a steak, my inclination is, if you want to really capture the consumer, then the consumer should have available to them to buy that steak that's smaller in the first place. It's a lot less expensive to develop the cattle and the genetics and all the feeding and all the processes that go into that final like carcass, that final animal going into the plant, from that perspective than it is to take a knife to those cuts in the plant.
What are your thoughts on fake meat alternatives? There's been a lot of news recently about Beyond Meat and Impossible Foods, their demand growing exponentially just this year. Do you feel that those products are a threat to our industry?
I didn't used to think so, but they probably are. I don't second guess this millennial age group anymore about anything. Things can change so quickly. And I think they picked up, I think that the Impossible Burger and some of those, I think they picked up some steam here during this COVID situation simply because of the prices and whatnot. Boy, I just would not discount it that it's just suddenly, that'll never amount to anything. I'll never say never is kind of what I say now. And I think there's some changes that are the result of the COVID situation that are locked in place in the industry. And like in these packing plants and these protocols, and on the demand side, the restaurants. This thing absolutely has wreaked havoc on the sit-down restaurants. And food service is 55% of demand. And admittedly, the takeout and the QSRs have done really well as a result of this, even with not having the sit-down part of the restaurant open. The takeout has done really well. But is that going to continue on going forward? Two things. We got to keep this demand going forward from where we're at, and it's solid, and it's really in good shape. Keep moving forward there, and we got to keep the export demand moving forward too. And in order to keep the export can't say we're not going to import any. So you got to have both sides of the equation to keep that moving forward, and you have to look to see what's, again, the beef industry on the domestic consumer side really take a solid look at, what's it taking to make this demand where it's at. Well, it's called quality. And I think, too, Mackenzie, I think it's important, and I really firmly believe this, ranchers have got to tell their story to the general public. And people have got to understand what happens on these farms and these ranches and what people do to provide food. People in this country, until COVID, they had no clue about food production other than they wanted to say, well, I want to know where my food comes from. But you really understand why you have quality food at an affordable price in this country, because there's nowhere in the world that has that like we do. We got to be very careful when we start making changes not to throw the baby out with the bathwater.
Do you have any closing statements you'd like to make?
When you really pay attention to the demand side of it and really give some credence to where consumer demand is today, I think you kind of change your thinking a little bit about how to keep the industry going ahead. You think in terms of you're in the beef industry and not the cattle industry.